behind us this morning. Vinit Sambre is a market master of the day. He's head of equities at DSP Investment Managers. Vinit, great to have you with us here. Thank you very much. Uh, you know, so we got the latest edition of Fed Speak yesterday overnight. We got a hike as well. And the general message seems to be that maybe the pace will come off, but because after this frenzy 75 basis point hikes, we got a 50 yesterday, maybe next one is 25. But the level is what perhaps what they're focused on. Level will stay high, level of interest rates around 5% for the bulk of 23. The market doesn't seem to believe that, Vinith, if you look at the price action overnight. What is your sense? So it's in a way Fed versus the markets. Who will come out on top? Your sense?
So I think markets are clearly pricing, very specific narratives at the moment, and they are trying to look at the overall, price movement. So, currently, as we understand, I think people are more focused on the inflation peaking out at the moment, and I mean, one data point actually leads to change in the narrative totally. So I would say that while we have inflation peaking, but still in the US at the rate where it is still high from what their reasonable tolerance limits are, and hence I think that continues to remain a risk. Fed remains more hawkish in their in their directives, what we saw yesterday. But I think more importantly, till the time US keeps showing very strong economic data, the hawkishness will continue, and that should be sort of negative for the markets overall is the view we have. But as far as the Indian markets are concerned, we would say that the long-term structural story for the India markets, remains pretty constructive to stable. And I think that should, mean that the downside for the Indian equities should remain protected for the next, let's say, the long term. And we may have some bit of, worries around the current demand environment, which is sort of showing some kind of sluggishness as far as the bottom of the pyramid is concerned, or the rural side is concerned. But I think beyond, despite that, we have seen decent growth coming back. And once we have the other part of the economy, which is the rural side of the economy or the bottom end of the pyramid, which also starts adding up in terms of the growth prospects, I think that should keep the markets overall, tone positive.
Just wanted, to draw your attention, Vineet, also to the life insurance companies, because this morning CLSA had written a note where they say that the risk reward is now getting favorable for life insurers, and whether it's SBI Life, HDFC Life, all up over 1%. They have aggressive target prices on SBI Life at 1650. So just wanted your thoughts as well in this space, life insurance companies. Do you think that from a structural viewpoint, a long-term viewpoint, this is a good time to be buying in?
See, we hold quite a positive view on the life insurance business overall, because we believe that there is a huge market opportunity to capture. The companies themselves are changing the mix of the business in such a manner that which is actually leading to positive margin outlook for these companies, at least for the next 1 or 2 years. There are some intermittent risks which are emerging in terms of the competition from the high deposit rates and all that. But I think these in the considering the long term outlook for the segment, I mean, these are sort of short or temporary problems, and I think these companies will continue to grow. And on the other hand, if we look at the valuations there, I think they are pretty reasonable as compared to where the overall markets are. So from that viewpoint, I think it makes a good case to look at the insurance businesses. And also the other factor is that when we compare across various sectors, it is very difficult today to look at businesses which are growing over and above the overall corporate rate of growth, where margins are expanding. More importantly, valuations are reasonable. So I think a combination of all of these is very difficult to find in today's environment. If you find good businesses having good growth, the valuations are not at all at reasonable levels. So I think from that perspective, on a relative scale as well, life insurance business actually becomes a good place to be.
Hi, Vineet. Good morning. Yeah, that's a valid point. A couple of those names, they're at pre-COVID levels, actually, if you take valuations into account, case in point being an HDFC Life. But Vineet, we are celebrating these all-time highs. Nifty is looking good. small cap really hasn't participated. It's still 15% away. Now, I've seen your investment thesis over the last few years, and at times you'll have mastered that art. Do you believe the best is yet to come in terms of the breadth of the market, the broader markets? Do you expect 2023 year to be a better year, or do you expect this underperformance to continue?
See, I would not like to very particularly talk about how the category would pan out in 2023. But one thing which actually gives me a lot of confidence and hope is the fact that we are actually looking at a very broad-based economic growth. It's not polarized in a way when we look at what's happening with different sectors. So, be it consumption in bits and pieces, we have some places which is where it is down. But I think on the whole consumption long-term trend remains positive as the demographics for us are favorable. When we look at banking, I think overall that is actually led by the overall economic growth that is growing. Engineering and capital good companies have seen record order books, and there are many companies. If we go down the market cap chain within the mid caps and small caps, where one can look at. Then real estate as a category has started doing well. If you look at the overall bookings and sales growth, plus the balance sheets are delivered now. So I think when I look at the large segments, there is a good amount of positive momentum which we are seeing. I mean, it can slow for a while, but I think the long-term trend is what I'm hinting at, and these actually bodes well for mid to small sized companies as well, and hence our view actually on the category remains positive. But only one caveat we have is that when we are looking at the small cap as a category, our investors need to keep in mind that these are businesses which takes 3-4 years for their full cycle to play out, and hence the investment decision has to be considering those time horizon.
Vinit, you spoke about life insurance, which is in a way an underperformer. The other big underperforming sector is IT services, Vinit. What would you advise viewers? I mean, there will be pain, there will be slowdown, maybe growth multiples will come off, but is it time to start investing systematically into IT names over the next several months?
Yes, I would recommend that because overall I think again if we look at what is happening in the IT sector, maybe because of the global growth slowdown, there is a possibility that the rate of growth for the IT sector may come off. So what was growing at, let's say, 13-14% may look like high single-digit growth over the next maybe 3 or 4 quarters. But I think if you exclude that slowing growth, the other important factor to note is the profitability has now stabilized. I mean, there was because of the high wage cost and supply side issues, the profitability or the margins were getting impacted for the IT sector. I mean, those have now got arrested because of the slowdown, and the job market seems a bit tighter now. So I would say that is a positive factor as far as the profitability for the IT sector is concerned. Secondly, a long-term view on the tech spends overall, I think corporates will have to necessarily spend money on those, and that makes us believe that Indian companies are anyways going to follow those trends and are going to be are going to remain relevant from that perspective. And hence, IT sector for us remains a long-term positive. To your question, Prashant, I think this is what we are also thinking that gradually as over the next 2 quarters or so, as the issues around slowdown keeps putting pressure on their price point at right valuations, we will be ready to look at and increasing our exposure.
Okay. Vinit, have a great day. We will speak to you again very soon. Thanks for giving us your views. But one sector that has come